Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience of SmithWeekly, including Mike P., Jack T., Paul M., Jeff S., and Jackie A. On the program today, we've got two guests joining us. Mr. Cal Everett, Chief Executive Officer, is back with us. And first time on the program is Mr. Jon Gilligan, President and Chief Operating Officer, representing Liberty Gold, a Great Basin, United States-focused gold project developer with its Black Pine Gold Oxide project in southern Idaho, as well as the Goldstrike project in southern Utah. In its recently published pre-feasibility study for the Black Pine project, the company anticipates a conventional run-of-mine heap leach operation that expects to have average annual gold production of about 135,000 ounces over the initial 17-year mine life, with an all-in sustaining cost of about $1,380 per ounce. Liberty Gold is listed on the Toronto Stock Exchange under the symbol LGD, as well as on the US OTC markets under the symbol LGDTF. Cal, it's great to have you back on the program. And Jon, welcome to the podcast.
Yeah, thanks a lot, Andrew. It's nice to be back. We're looking forward to taking questions and answering everything you want to throw at us.
Andrew, thank you very much for the invite. I'm delighted to be here for the first time and looking forward to the conversation.
Well, guys, I want to get to the market and get each of your thoughts in a moment. But Jon, you're new to the program and probably are new to much of our audience. Just give us your background and experience in the natural resource sector.
Thanks, Andrew. Yeah, I'm a geologist by training. I did a PhD on Archean gold mineralization in banded iron formations on a small mine in Africa. That was in the mid-'80s. I spent 11 years in Africa in 3 different countries working on gold, and then joined BHP while I was there and did a bit of work on the Kabanga nickel resource in Tanzania. From there, I went to BHP transferred me to the Escondida copper mine in Chile, and I stayed there for 10 years. And that's where I really cut my teeth in mining. It was an incredible experience going through, starting as a grade control geologist and then ending up as mine operations manager. So it was pretty incredible experience. From there, I went to, I was posted into South Australia and worked at Olympic Dam for about 5 years. Then I did some consulting, a couple of years of consulting in Australia, largely working on autonomous haulage. I had the privilege of working with Caterpillar to set up the first autonomous haulage system in the Pilbara. From there, I went back into mining and joined SSR Mining out of Vancouver, and was their vice president of projects and technical services. Ended up posting into Argentina and ran their Argentina operations, the Pirquitas mine, for 3 years. Did a mine closure, a mine permitting, and ended up opening a satellite pit for them, and that operation's still successfully operating. Left SSR and joined Torex as in a sort of a VP underground mine planning and design role. I really wanted to get some underground mining experience, having really focused on open pits. And the opportunity then came along to join Liberty. And when I'd been in SSR, I had been involved in the acquisition of the Marigold mine from Goldcorp, the JV, and had been responsible for writing the integration plan and knew that asset very well. And so when the opportunity for Liberty came along, I very quickly identified Black Pine as being a dead ringer for Marigold, and was convinced at that time, 3 years ago, that it was going to be a mine, and decided that would be an interesting thing to do to help the company develop that excellent looking project into a mine. And here I am 3 years later, firm in my conviction it's going to be a mine. So that's me in a nutshell.
broad-ranging experience here, and I think this is very useful to Liberty. And here you are back dealing with conventional open pits, always a good place to be and to spend your time. And then also Olympic Dam, copper, uranium, always an interesting one there. Really appreciate your comments, and I think it is very good to have you on board at Liberty Gold, advancing the work at Black Pine and, of course, Goldstrike. I want to talk just the gold and junior sector for a moment. I'd like to have Cal first take this. Any thoughts on how this year came together, your thoughts on the gold price here, and, of course, the junior sentiment out there and how you see things setting up for 2025, Cal?
I'm getting near the tender age of 70, but my brain's like a 20-year-old, so I might give you a lot more information than you're looking for, Andrew. But I was surprised the gold price got to this level this quickly, but it doesn't mean it stops here, right? Because there's just no product out there. There's been a lot of changes since I got into the business. I'm going to say 30 odd years ago, and where the sell side's changed, the algorithm trading has come in. And then you've got all of a sudden central bank buying of physical gold. You've got the Shanghai exchange. You've got inflation risk. You've got issues going on now today in Syria. You see Lebanon, political discontent, all that kind of stuff. All is fuel. Any one of these items, and there's probably 10 more, that can affect your gold price. So do I think the gold price is going higher? Yeah, I do. Yeah, I do. And you can tell by the nature that the producers are, they're trying to buy deposits because they're out of deposits. Okay, so that's a bullish sign for the gold price. And I don't know if you caught it this morning, but SSR purchased the Cripple Creek mine from Newmont, and oh my God, I would say it would probably be around 2005. I sold 30% of that mine as a banker to AngloGold Ashanti. And then it was passed on to Newmont, and now it's been passed on to a new host. So the point is that the producers become hosts of other deposits, and they don't have a resurgence of supply. And I do a lot of personal work in the copper industry because now you can see Agnico, Teck, Kinross all setting up copper divisions in South America. And generally, they're number one, that's obviously a bullish sign on the copper price, but at the same time, it tells you that they're not finding the gold deposits they want. So all of this ultimately is going to take you much, much higher, I think, in the gold price. And another way of looking at the gold price is 1%. It's just a simple number. So if you've got gold, let's say at $2,600, well, 1% is a small amount of dollars. But at $500 gold, it's different. So you're going to see, I think, more volatility in the gold price up and down. I think there's more speculation in it. But at the same time, there's no physical around. There just isn't any physical gold around. So ultimately, I think that the gold price is going higher. But the markets themselves, you have to go through a minefield of different opportunists that are trying to take advantage of you or push you around and stuff like that. And I'm not one who is normally pushed around very much. So, it's all a learning process, but you have to adapt with the times.
It's a lot of things to talk about here, and we could cover a whole episode just talking the gold market and much more. But I want to get John's thoughts briefly, and then we'll move right into Liberty Gold.
Yeah, thanks, Andrew. I think, obviously, I concur with Cal's view. He's, he talks to everybody and has incredible tentacles out into the industry. From my perspective, given the favorable gold price, obviously, if you're producing now, you're making some great margins, and those companies are being rewarded in the markets as obviously great cash flow. Margins are facing some squeeze, of course, because of inflation. Largely under control, but some not. But nonetheless, the market's rewarding those players. The ones that have sort of taken the hit, if you like, are the developers. And, there are not many developers out there that have got decent assets, decent deposits that are in decent jurisdictions. And right now, they're sorely undervalued relative to producers, in my view. And with a relative lack of opportunity in the market, I think we're going to see things turn, and I think the developers are going to get snapped up at some premium to current markets because the producers are going to realize that they've got to add their pipelines, and obviously they'd like to do it with organic growth, and many have got that opportunity. Not everyone does, and they're making lots of money, they're building war chests, and they need to do something with that capital. So I think we're going to see movement in the developer market in the near to medium term as that gold price continues to reward the producers.
Jon, thank you for that. Very good information, and 2025 should be an interesting year for the markets. See if we see a flip in the sentiment and also some of the increased M&A activity out there. And of course, we're seeing that in different places, and Liberty's right in the midst of some of those companies that are being heavily looked at out there, I'm certain, from mid-tier and majors. Well, I want to get into the pre-feasibility study results and the plans for Black Pine. Then we'll get into some other stuff. Cal, to start off here on Black Pine, walk us through the key features of the pre-feasibility study that came out and what is envisioned to get this project into production.
Well, the fine details are probably better out of Jon's mouth because he did that study. But it shows a long mine life at approximately 17 years at 135,000 ounces on average a year. But in years 1 to 5, we front-end loaded it in order to increase cash flow in order to pay back capital. You're sitting there with a long mine life, and in the interim, we're exploring, and we think we have filled in the gaps to increase the 135,000 ounce number up to the 150, 160 range. The capex is low. I think it's $327 million to build it. The project is well located, and it doesn't have any, as Jon calls them, birds and bunnies and exotic species or anything like that that's going to bother us. There's no water, there's no fish, there's no trees. So it's kind of in a perfect location. One of the things that we look at Liberty Gold is defining which projects has a risk. So in other words, if I were to go out and look at a potential acquisition, but I knew that acquisition could be an attraction to an NGO, I'm not going after it. Like Liberty focuses on keeping the company nice and clean and not build up like confrontation or a reason for somebody to complain. And that's why we have such an extensive community relations group. There's no people in the jurisdiction. We've got power to site. We've got all of our water secured, which is big now in the United States. I mean, Black Pine is pretty vanilla. And so I think, Jon, if you want to get into the details of the PFS, go for it.
No, let me jump in there and just say, yeah, Cal, thank you for that. And I want to talk a little bit about some of the features here in a moment. Jon, just talk about how the study turned out for you and what elements of the project you see being improved as you guys work on now the feasibility study and, of course, getting this project ready for construction.
So Cal already took us through a very high level, and just perhaps to add a little bit to that, what we're talking about here is an open pit, a series of open pits. I think we have a total of 7 individual pits, 2 kind of large pits, and then 5 sort of smaller, think satellite, but not remote in the same footprint. So 5 smaller pits. So the Discovery pit is one of those main pits. That's where 60% of the production comes. And then the range front pit gets opened up once Discovery comes off and produces the gold for the back end of the mine life. And the 5 satellites sort of fill in gold production to try and keep us reasonably constant in terms of metal over years. It is a run-of-mine heap leach, so no crushing. It's drill blast, load, haul, dump on a single pad, irrigate, and then gold solution comes out the base of the heap, run that through a series of carbon columns, and produce gold doré bars on site. That is a very, very well-known, very well understood, very commercially viable process that's operating in multiple mines across the US. And in fact, exactly the same process that was utilized on the same site when it was mined in the 90s by Pegasus. So we're not doing anything different than was done before. It is a previously disturbed site, so that gives us a huge sort of advantage in the sense of going back to the authorities to permit the same operation that was previously permitted. So very comfortable with that. We have a great deal of metallurgy and metallurgical test work that we've done in columns to support that process route, this sort of run-of-mine heap leach. we put together, I think, a really world-class team to do this pre-feasibility study. We skipped a PEA, as you may know. We didn't do a preliminary economic analysis. We felt that we didn't need to, and we had in 21 when we were thinking about doing this. We discovered the Rangefront deposit, and over 18 months drilled out 1 million ounces. And that took us to the plus 3 million ounce resource base, which we published in February of this year. And that we were confident was enough to underpin a pre-feasibility study. Again, so we leapfrogged that PEA stage. We had M3 as the lead engineers. They've done a lot of design work on heaps and leach process facilities in the US and elsewhere. We had Newfields doing the heap design, and they've designed something in excess of 70 heaps in the US. And then we had some pretty well-known consultant groups, discipline engineers doing, the geotech, the water studies, and some of the environmental work. We had Stantec, who've been working with us for nearly 5 years on this project. So very, very a classy team. And I think we came up with a very credible and very reasonable pre-feas that sort of adequately describes, if you like, the capacity or capability of this asset. Our target when we started the pre-feas was we wanted 150,000 ounces a year for 15 years. That was sort of the operating window that we wanted to get the mine plan into. And I think we've achieved that. We front-end loaded the grade because we wanted to push for a high internal rate of return, low payback solution, which had initial capital that was in reach of a company like Liberty. And so we had higher capital solutions, we had higher NPV solutions, but as I said, we focused on this modest initial capital, 320, as Cal said, and a 3.3-year payback. That's at $2,000 gold. At spot, that payback reduces to about 1.5 years. So that's pretty attractive. We see very clearly in the economics that this project is very, very highly leveraged to metal price. And so, our base case NPV, for example, was 550 million. That's at $2,000 gold. That's an NPV 5. That rises to 2.3 billion NPV 5. This is after tax at 2,600 gold, which is below current spot. So this really is an asset that takes off in a rising gold environment. And I think, there's lots of improvement opportunities, but I think the PFS really gives you a good, solid sense of what this is going to do. In terms of upside in the fees, as Cal said, we have a sort of a lull, if you like, in metal production in the midlife. We've already drilled out inferred resource sitting inside the reserve shell, and that will fill that gap. We published recently, earlier this week, a discovery of some higher grade near surface material sitting inside the resource shell that at the PFS level was considered waste and now is clearly mineralized, and we expect for that to transition to ore in the fees. So what that's going to do is it's going to give us a little bit higher grade potentially earlier on. It's going to fill out that gap in the middle, and it's going to ultimately drop that strip ratio. We're a 1.3 to 1 strip ratio, which is extremely competitive in the Great Basin. We see that going down even further as the price rises, and as we sort of explore what's the cutoff grade going to do against a rising price. So I think a lot of upside optionality for this project over the next year as we do the field work to get it into feasibility engineering by the end of 25.
Jon, thank you for that. And there's lots of extra work to do here, and this is going to look quite a bit different, I think, in the years to come. Of course, that'll require you guys to continue your success, which I do think will happen. Jon, just one other question here, and maybe Cal can chime in here as well after you. Any expectations on further recovery efficiencies? Right now the PFS has recoveries of about 70%. Very good leach times, by the way. Do you see further work to improve recoveries coming out of the feasibility study? And then other than general inflation expectations, any specific areas of cost escalation that will impact the cost profile in the definitive feasibility?
I think metallurgy, we're pretty solid on metallurgy. I think, we've got 194, I think it is 194 columns. We have a very detailed set of metallurgical equations that defines gold recovery by grade. We do have some additional test work to complete going into fees. So we're going to be running another 40 odd columns, I think, early next year. So that's going to refine some of those equations a little bit. The extent to which we've found more mineralization in the rangefront area, that mineralization is significantly better recovering than other parts of the ore body by some 10%. So the more that the more volume of rangefront that goes into the mine plan, the overall average recoveries will go up. I don't anticipate to see material changes in those recoveries. I think it's going to be a sort of a tweak, if you like. What we don't have, of course, in the mine plan is silver. We do know that we recover silver. The previous operation recovered around about a sort of 50% of the gold ounces came out as silver. So for 100,000 ounces of gold produced, they produced something like 50,000 ounces of silver. So we would see that coming into the recovery model at fees. So that'll give us a little bit of extra value uplift. But as I said, I think the recovery model, we're going to see sort of modest incremental changes. With respect to cost escalation, that's a really interesting question. We're anticipating that this construction would start in late Q1 2028. And so, we would be purchasing long leads a year ahead prior to that, so late 27. So that's late 26, early 27. So that's sort of 2 to 3 years away. I think we're going to see some cost escalation probably in the liner for the heap. I suspect that's going to be something that's going to come under pressure. Everything electrical is always complicated. It's probably the longest lead times. So the E-rooms, switch gear, high voltage, high tension switch gear, I think we're going to see pressure on that, and in terms of delivery times and probably pricing. I think other than that, the only sort of thought I have is really availability of mining equipment. The mining industry goes through cycles of having a dearth of equipment, and depending on where you are in that cycle, it's either readily available in 3 months or you have to wait 2 years. So we've opened communications with the OEMs, with the Caterpillars, with the Komatsus early, so that we get this project on their radar screen sort of now for equipment deliveries in 3 years. So we are addressing some of those cost escalation and supply issues relatively early on, and I think that's the right way to sort of mitigate schedule and ultimately costs on your project.
Absolutely agreed with that, John. Thank you. And automation is always a challenge. And then you guys definitely are a step ahead here with your experience and Cal's experience in making sure that these long lead items get ordered and the supply chain, if you will, gets smoothed out in advance to actual construction. Cal, any other additional comments you wanted to add on that front?
When John joined us, it was to his credit. And I hope he doesn't ask for a pay increase after I say this, but to his credit, he said, if you go to a PFS, don't go looking for people to hire who are going to give you the money, your imagination, who are going to give you the numbers your imagination is dreaming about. Okay? So make it real, make it defendable, and try to match it at full feasibility. Right? So you've got lots of room and lots of leverage, but you have to do it right. And I think that's an attractant to companies that look at us and things like that. But you have to do this stuff conservatively. And it's like when I personally invest in things, and I own a lot of Liberty Gold shares, as does John, if it's a mine, I've got patience. If it's not a mine, I don't, in my mind. Okay? So I could go look at a showing in, I don't care, Africa, and I'm going to say, oh, that's an interesting drill hole. But that's not necessarily a mine. So you have to look at jurisdiction, politics, taxation, protection of your after-tax cash flow, stability, all that kind of stuff, and trying to invest in this industry.
Very good comments there, Cal, to add. And I hope the audience is taking some notes as you guys talk here. I think there's some important points brought out. Jon, just back to you briefly. Earlier, you talked a little bit about power and water secured for the project. Talked about that from the sense of, what power are you guys bringing in? Obviously, there's already a transmission line there. And then also talk about the water source for the project and how you guys have been able to secure that.
Yeah, sure. Happy to do that. So you're quite right. Because it was a previously mined site, there's a 25 kV power line right to the front gate that is currently energized, and we're drawing power off that for our site office on site, and also for the water wells that we use for the exploration and resource delineation drilling. So power is installed. We ran a study with the local utility, Raft River Electric, to confirm that we could draw 10 megawatts over that existing line. And we've confirmed that. That line ties into a 135 kV line about 10 kilometers south of the mine. So there's good high voltage feed into that line. The PFS, if I remember the figures correctly, I think our peak draw is 7.6 meg. And I think the average draw is like 4.3 megawatts. We've got power capacity to run the mine, and most of the power draw are really pumps. It's solution pumps and also the induction furnace to regen the carbon, the sort of the two main power draws. So it's a pretty modest, energy consumption. If I remember correctly, energy is about 3% of OPEX. So it's a pretty modest number. And we also have the advantage that in getting supply through Raft River, it's in excess of 90% hydro. So it's kind of green, renewable energy, which is very nice. I think we've got a good environmental footprint, and we've got power on site. And we probably have, and this is a fees opportunity, there's probably enough capacity on that line inside the 10 meg for us to put in a principal electric shovel, as opposed to going all diesel, an all diesel fleet, which is what we spec'd in the PFS, to put in a single shovel without having to worry about additional power supply. And I think that it's sort of electrification as a theme is something we will look at going into feasibility. But if we went battery electric trucks, for example, which I think is where the industry is going, we would need a significant increase in power, and that's something we will look at down the road. In terms of water supply, we were, the company's sort of view, this company's kind of DNA is in advanced exploration. Where I say advanced, I mean not only from a sort of scientific geologic perspective, but advanced in the sense of preparing a discovery to turn itself into a future mine. And that means the right kind of social engagement. It means understanding biodiversity, environmental impacts, and doing clearance early so that you know what's there and what anticipates future potential impacts, but also picking up a water supply before really any kind of economic study is out there and people understand perhaps what the potential is. And I think the company's been extremely smart in picking up. We've got a roughly 200% of the water requirements for the size of operation contemplated by the PFS, which is a 50,000 tons a day feed to leach. That operation requires, these are American units, it would be something in the order of 1,700 acre feet per annum, which is a particular imperial unit for water consumption. And we have water rights to draw in excess of 3,000 acre feet, so just under double. And not only that, once we start drawing that water supply, that water supply is coming from current wells. So the wells exist, they've been drilled, they have power to them and pumps in, and they're drawing water. That water is currently being used for agricultural development. We have deals with the local farmers when the mine goes into production. we take the water, we repurpose that water from agriculture to mining. The agriculture stops and we compensate the local landowners for that loss of income. And then we operate the mine with that water supply. When the mine is complete, we hand the water supply back to those local farmers, and then they return to agriculture. The key thing there being is that we are engaging with and providing opportunity for our local community, but most importantly, we're not a new water draw on restricted water supplies in general in that part of the US. So there'll be no new net draw on the basin as a result of our activities. And in fact, our preliminary hydrological studies suggest that, in fact, there may be some basin recovery as a result of us taking over those water supply by us being able to manage drawdown in our own part of the sub-basin that we control 100% of the water draw of. So, we stand the opportunity where the mining industry, in fact, is improving long-term water supply rather than the other way around. So, we've been very careful and I think very smart about how do we manage water respectfully and how do we use that precious resource in a reasonable and environmentally friendly way.
Cal, any additional comments on that?
What we've done over the years at Liberty Gold when we picked up Black Pine is we made a conscientious effort to predict what might go wrong and address it years earlier. Okay? So we secured the water supply, we had the power, we bought the land in case we wanted, and we know what it's going to cost if we wanted to upgrade that power grid. We've done environmental studies. There's no First Nations association here because of the fact that there's nobody within 100 miles of us, and there's no community. And then when the dirty word, the sage grouse, came up as an endangered species, we put in a lot of money to do a sage grouse study. We found 7 birds. That's it in the entire valley. But we've already gone out and built habitat north of the property, away from any mining operation, and we did it with the Bureau of Land Management, and they planted all of the sage just to effectively deal with something that may never show up, but we did it anyhow. When it came to mule deer, we didn't know if somebody was going to say, well, what are the mule deer doing in the wintertime? So we've done mule deer studies. All that kind of stuff is done. The money's been spent, and it's just as logical. You have to nip these things quick. You don't want to be surprised and delay your process in the end. It's a great team, and Liberty keeps moving on with other things that we're working on. I think it explains pretty reasonably how logically we take this project.
That's good information to know. Thank you for dealing with some of the wildlife issues there, and I think it goes to show your guys' ability to plan way in advance, to deal with some of the issues, put forth some of the effort, quite frankly, help some of the other agencies do their job. Thank you for that. And just that overall work to advance this forward in a smooth fashion. The baseload hydroelectric, really appreciate that. Anything baseload is good and acceptable. We want this mine to run without interruptions, without issues. So I appreciate the baseload focus. It's a great way to go about the water there, John. I appreciate that. So John, the company announced last month that it was advancing the permitting process for Black Pine. Talk about that process generally, and of course the focus on the key federal permits, as well as what you expect on the total permitting lead time for the project to potentially have all permits in hand to start construction around that 2028 timeframe.
Of course. So publishing the pre-feasibility study was sort of the key first step in that formal US permitting process. The deposits are on US Forest Service land, and the proposed heap is on Bureau of Land Management lands. So we have the forest as our lead permitting agency, and the BLM is a co-lead, but the forest is sort of the principal lead, if you like. And then obviously we have the cooperating agencies from the state. With that PFS published, we are able to use that technical information to write what's called a mine plan of operations. That is the start document to the formal US mine permitting process, which occurs under the National Environmental Policy Act, otherwise known as NEPA. We expect to submit that mine plan of operations at the end of this year. I saw a draft yesterday, so we're in that final sort of stage. And essentially that document is somewhat of a reformatted pre-feasibility study with a bit more of an accent on what are the impacts and what are the proposed mitigations. That goes into the forest as lead agency, and it goes through a period of 6 to 9 months of what's called a completeness review to make sure that all of the agencies led by the forest, the BLM and the state agencies, are comfortable that they understand what we're proposing and that we understand what the impacts are and that they, at least in principle, understand what the mitigating strategy is. Once that's accepted, and we would hope that that would be the second half of next year, that then goes to a notice of intent, which is a short process in Washington that creates an entry on the federal registry for that mine plan. So that's the noticing period, and we would expect to have that notice of intent sort of late 25. From that point on, there is a 2-year mandated period to get to a decision notice, so a yes or a no. And in that 2 years, a third-party contractor paid for by the proponent, which is Liberty, working for the lead agency, which is the forest, they write the environmental impact statement. So there's sort of 3 parties involved. There's the agencies, there's a third-party contractor, and Liberty. And based on the mine plan of operations and based on all of the environmental baseline work that we have done over the last 4 years, the EIS contractor takes that and writes an environmental impact statement. During those 2 years, there's a draft and then a final, and there are 2 periods of public consultation where you produce a draft, you go out to the public and say, look, this is what we're planning. What do you think? Give us your feedback. With that feedback, that gets worked into the final document so that we've had consultation, we've had input, and we've taken account of people's views in terms of, well, how about doing it this way rather than that way? Or maybe don't do this, but go do this. So that's a well-known, well-understood process. And we expect that to be completed, as I said, by 2-year process from the notice of intent to decision. And decision would be sort of Q4 27. And then at that point, a final decision, there's an administrative period from the draft to final, and we would expect a construction decision on reception of the draft notice. So the board would make a construction decision late 27. Then with the final notice in hand, sometime in Q1, construction would begin as the snow melts after the winter of early 28. So, March, April 28, we would expect to have equipment on site, all things being equal. That would allow us to produce metal late 28 because it's a sort of 8 to 10 month construction window. Relatively simple construction. This is not a complex problem. We have a sort of a 2-year sized heap pad we have to build. So that's a relatively small footprint. We have obviously the carbon plant to process the gold in and a truck shop to build. Pretty modest, pretty simple, pretty straightforward infrastructure. And I think, we're pretty confident we can do that in under 12 months. And as I said, that's the basis for our belief that production decision late 27, metal a year later, late 28.
John, it all sounds very good here, and I think investors can be reassured with your guys' expertise here that things are going quite well. Cal, so just want to talk briefly expansion and exploration upside for the project as you guys go through this regulatory red tape period to get the project permitted as well as final studies. Obviously it makes sense to have continued exploration work, expansion upside happening for the investment community as you guys go through this kind of Lassonde curve lull, if you will. Just talk a little bit about the range front area potential recent results, which John alluded to earlier.
Funny because when you use the terms Lassonde curve, I think Pierre would have regretted ever mentioning that because everybody pulls it out, and I know Pierre quite well, so it's just an interesting one. But black pine is is effectively a massive gold system that covers, we don't know how many square kilometers. You just keep drilling and you keep finding gold. It's just the nature of this beast. And when you find gold, you extend mine life. So, it's hard to say what's ultimately going to be here. I think Marigold, John, you were down there. I think it started mining high-grade underground in the 60s, and it's still going and producing 200,000 ounces of gold a year of oxide, right?
That's correct.
And so these type of systems like Marigold, Black Pine, Round Mountain, Bald Mountain, they're rare to find. They really are. And so when you talk about the exploration potential, well, it's pretty much unlimited because you haven't drilled it yet. It's just, it takes so much work to drill these things. And let's just say you go drill a hole, but you still got to get it into resource. So you have to drill it on, say, 35 to 50 meter centers, which costs money to build those ounces. So, I couldn't tell you how good Black Pine is, but it turned out to be a heck of a lot better than what we thought when we originally bought it. And credit goes to Moira Smith for going up for an afternoon in a snowstorm with her husband and walked up a road. She said, "This is a Carlin system." So we bought it. That's how smart that woman was. And she's the one who said, "I think we got to drill range front, and there's over 1 million ounces there." You've got to surround yourself with brilliant scientists. Like, I'm a geologist, John's a geologist. I'm not as smart as the people around me. I'm really not. Because I look at different things, different focuses, right? So the upside is huge.
And Andrew, just perhaps if I could just add a comment to Cal here, just to give you some numbers around what Cal's saying. The footprint that we have at the moment, so the area of the resource that we've drilled is roughly 20 square kilometers. That's the sort of, the rough footprint where we have a resource. We see lots of potential inside that in terms of incremental expansion of resource that we already know about. But that's what currently defines the 5 million ounces that we have in resource today. Middle of the year, we got a permit for an additional 16 square kilometers outside that, as a sort of, think of an onion ring around that core. We started drilling those 16 square kilometers this year, and we've got results that will be coming out over the next period. We had some really interesting holes. We discovered some geology we weren't entirely sure of, and lots of smoke and lots of interest. So that takes us to the 40 square kilometers that's currently permitted for us to explore, 16 of which I think is really good upside. Our claim area, it has an additional 30 square kilometers outside that 40, so next onion ring around, that we haven't looked at all. No drill holes, no surface geochem, lots of structure, and I think, just to sort of reiterate Cal's view, this is, whilst it is a brownfield site, whilst we have got 5 million ounces in resource, this is still very much an ongoing, almost greenfield story about upside opportunity. And I think we're going to be drilling almost virgin exploration holes here for the next 5+ years with all sorts of upside and interest and opportunity. So it really is very much alive from an exploration point of view.
I do think it makes sense there to continue to do that. There's a lot of upside left in this. Obviously, it takes capital. As you guys know, the share price, you can make this argument all day. The share price should be higher than where it is. Thus, the continued fight against the Lassonde curve to get this up. But it's not entirely a Lassonde curve, as Cal said. Its market conditions are pretty weak, too. So we have to continue to progress. I think cash flow gets rewarded a lot more these days than some of these other things. But you guys are moving forward towards that. Cal, just because we're on a time frame with you, on capital structure, if you want to cover this off, the company completed an equity financing back in May for about 12.5 million Canadian, as well as payment received in October under the sale of the TV Tower project for 3.7 million US dollars. Cover where we are on cash on hand now, how far you think that gets us down the pathway into 2025, shares outstanding, and of course the major shareholders on the roster.
Oh, well, the major shareholders, I think there's 28 resource funds, pure resource funds, who own the shares in the company. I wasn't happy with the sell-side bankers when I did the last raise at 35 cents with a half warrant at 45 cents. So I did it myself and didn't pay them a fee. I don't think they liked that, but that's life, right? Because that's what I'm trained to do. These companies always will need money at some point in every calendar year. It doesn't make any difference if you have no deposit or a lithium project. They spend money. And getting them to a mining scenario is a tough one. It really is. We've got cash. We can get well into next year. But I'm always listening and talking to people and talking to corporates and all the other kind of stuff. So I'm not going to get into the minutiae of what I do for a living and John does with me is due to, it's proprietary. But, you analyze everything and figure out what you want to do next. And you find out what's the leverage for your shareholders, and then you address it. And so you take it to the board, and it's a very simple process. Financially, we're fine, but we're not on fumes, far from being on fumes. And in October of 2025, we get another, I think, 2.2 million US from the sale of TV Tower. And then October of 2026, we get 2.6 million. That's non-dilutionary cash. And so we've effectively moved out all of our Turkish assets, basically because the feedback we were getting from some of our shareholders and corporates was, we don't know what to do with Turkey. So we moved it. Okay. And that was a hard process to do, but it was done. And it simplifies the company. So now it's effectively Black Pine and Goldstrike. And Goldstrike's another 1 million ounce deposit in the company. And now that we've uncovered a major antimony system, basically because of the antimony price, that becomes another newsworthy item next year. And John and I are debating when to do update the historical PEA on that one. Because when it was originally done, I think, John, it was $1,350 gold, wasn't it? Something like that?
That's correct, Cal.
So at 2,000 gold or $2,600 gold, I'd rather use something conservative, because I think if you use too high a price, you're pushing on a rope, and you just got to make sure it's conservative and then go see what it looks like, right? It doesn't cost a lot of money to do that, but we should do that.
Cal, any other closing comments for the audience before you take off? We appreciate your time today.
No, I think everything's covered. If John is going to keep talking, I just got to move on to this other call.
So I'll let you get to your next call. Appreciate your time and keep up the efforts on your side.
Okay, be well. Thanks for having us.
John, let's continue here. So the company has been also doing some work on the second focus project, Goldstrike in Utah. Talk about some of the ongoing work there on the project, as well as how this pipeline project fits into the overall Liberty strategy.
Yeah, thanks, Andrew. So I told you at length about our water strategy for Black Pine. It was very, very important in that area not to have new water draw. And so we had a strategy that addressed that. In the Goldstrike down in, which is right by the town of St. George in southern Utah, there really is no available water that we could appropriate in any means. And so it required a new water strategy. And this is an arid area. They've been in long-term sort of water shortage for many years. And so we've been working with the local water district over the last 2 years, actually, to try and work through where do we find water, what's the best option, how do we support the water district in their quest to build water resources for long-term domestic use. And it's been quite a journey. These are sensitive matters. The area that we are, there is somewhat remote from the consumers, but there's a fairly large pipeline to a reservoir that's within sort of 20 kilometers from the site. And so the opportunity, if we're successful in discovering new water in and around the mine site, the opportunity to have that connect to long-term domestic water supply was really quite interesting. So we've been involved in negotiations or discussions with the district. We're not done yet, but I think we're close to getting some kind of agreement that will have us working jointly in discovering some new water supply. So that's been a real focus for us. Previous to and that, as I said, that's a couple of years. Previous to that, we've done a lot of work drilling out the resource. We do have a PEA that was published in 2018, which is, I think, quite a reasonable representation of the capacity of the project to turn itself into a mine. This is not a Black Pine-sized system. It's probably a third of a Black Pine. And it has some upside potential for exploration, but not as positive as black pine, I think. So again, it's a previous producer, it's a previously disturbed site, and we would be mining and leaching in exactly the same way as was done on that site. So relatively benign from an environmental point of view, so I think very permittable. But until we get a water supply, the technical work is on hold. We are doing a bit of desk work. We did a reinterpretation of the geology. We re-estimated the mineral resource, and we are now in sort of a PEA level update, as Cal mentioned. We're doing that as an internal study with updated mining costs and obviously updated metal price. If we find that comes up with a materially different result relative to the current PEA, we can decide whether we release that or not. So that's a decision that will be sort of first half of next year, and hopefully that, with a water agreement, sort of solidifies the go forward case for Goldstrike. So that's the sort of the Goldstrike gold production piece. But Cal, who has brilliant insight to these things, when the world restrictions on trading antimony sort of became more important, a number of months ago, and as the Perpetua mine, stibnite mine in northern Idaho, is getting substantive U.S. government support for that source of U.S. antimony production. Cal said, well, when we did the original exploration at Goldstrike, we did pick up on the eastern flank of the gold system. We picked up anomalous antimony, and this was 2016, 2017, and we kind of said, okay, well, there's a bit of gold there, a bit of antimony, but okay, fine. And we sort of let it go. And Cal said, well, don't we have antimony in Goldstrike? And we went, yeah, we do. So we went back into the field, resampled the areas that we discovered antimony, and put a bit more geologic thought into it, and have now realized that there is a fairly extensive jasperoid breccia system, which looks like it's bedding parallel shear, or subparallel at least, producing these brecciated shear bodies that outcrop on surface. They're strong, they're silicified relative to the surrounding rocks. It occurs on the contact between a volcanic and a limestone unit. And on the surface, you see very coarse bladed antimony oxide mineralization, a mineral called stibiconite. Typically, that oxide is the in situ oxidation product of antimony sulfide, a sulfide called stibnite. And that mineral, stibnite, is the sort of the typical mineral which is mined for antimony supply, and certainly is the mineral that Perpetua would be mining. And production records show that there was a small stibnite mine, historic records, the Lavage mine, on this jasperoid breccia. So we've got historic records indicating that stibnite exists. We've got an oxidation product of stibnite near surface. So we would expect, if we track these jasperoid breccias down dip, we would expect that oxide to transition to massive stibnite mineralization. We see percent level grades on surface, and we came out a few weeks ago with an update from some of our surface samples showing stibnite grades in excess of 5% in these surface rocks. We've got some of this jasperoid that's running at gram level gold, 3 to 4 grams, 2 to 4 grams. So we've got, in the center of this system, we've got a gold system, and on the flanks, we've got this antimony gold system. We're back in the field literally on Monday to do another round of surface sampling to sort of confirm that first round. And if that sort of pans out and we can define 3D, at least 2D on surface, and then project down dip to 3D geometries, we can get ourselves a sense of probably what this thing looks like. We've got more than 2 kilometers of strike length of this jasperoid breccia mapped. And if you just sort of sit back and do some kind of rose-tinted spectacle analysis, you could see that there could be quite a substantial antimony mine here that would be significant in terms of, could be significant in terms of US production. So it's early days, and we don't want to sort of defocus our efforts on black pine, but this is something that's starting to gain a bit of traction internally, and we will take it through to the next stage. And by, I would think, the second quarter of next year, we'll be in a position to sort of make a decision about, how much attention does this deposit merit? And what are we going to do? So I think an intriguing, potentially very exciting opportunity. We want to tread cautiously, see how things go.
It's an interesting project, and certainly is a pipeline project that I think carries a lot of value to Liberty Gold as a second project that could be brought online to help boost a production profile overall for the company across the two projects. And then also antimony as well. You and I could probably have a separate podcast on talking the supply chain constraints and supply demand on antimony today and what are the opportunities in that market. But good to know you guys have some showings there. It's in the US, which is interesting and something that could be advanced as well. So I'm excited to see that additional piece come into the company and see how important that becomes as you guys co-advance there at Goldstrike on work and getting that sorted, plus black pine being the first and foremost focus of the company. Another item here I think that's important to talk a little bit about is, just getting your thoughts on where we stand with M&A out there in the market, maybe just some brief thoughts on the M&A market out there for gold development companies, but, how acquirers might look at Black Pine and Liberty Gold as a whole. As you know, we've seen generally M&A transactions occur more down the road now with development stages as projects get de-risked, perhaps more so than what has been done traditionally, John, looking back maybe even over your career and what you've seen out there. What do you see as the proper stage for Liberty Gold, assuming shareholders agree on valuation? And of course, there is a desire out there, I think, within the management team to take this project into production in-house, of course. But should a suitor come along, what do you see as really the ideal place now that a suitor would look at a company like Liberty in the US for a takeout? Because it seems to be happening much later in the process now.
Yeah, it does. I think, when I first joined the company 3 years ago, and I started doing marketing with Cal, and we were a 2 million ounce in resource, with a big footprint and lots of upside opportunity. It was very much a sort of, you're an exploration play and we'll see how things go. And there's a place for those in the market and lots of excitement with grade. As we got to a point, it was interesting where we had started building a resource that looked like it could be a mine. The narrative switched to, well, how can you permit this thing and how long before you could get a permit to build a mine? And at that point, we were sort of 5 years away. I'm thinking sort of 2 years away, 2 years ago. And that sort of 5 years to metal turned off a lot of people. You're not relevant in the development sense. And it seems in the industry there's a sort of a gray area where if you have exploration success, that means you probably got a mine. The attention seems to switch from future exploration success to, well, can you permit this thing? And because you have to go through a defined permit system, which in the US is not complicated, but it's complex. And it takes its time, and it's not the quickest in the world, nor is Canada, by the way. There are similar jurisdictions. People sort of start to turn off. Well, you're miles away from metal, therefore, I'll go somewhere else. And that's been, I think, a narrative that we've heard fairly consistently up until we started getting. We published our pre-plan of operations basically a year ago. And sort of got on the map with the federal agencies. And now that we're on the map with the federal agencies and we've got a very clear path to a permit, sort of the narrative now is, well, okay, I can see you're on the permitting track, and I can see you're about to do your mine plan of operations. What's the risk? And do you think you're going to get it? And do you think you're going to have delays? And it's kind of interesting. It's like people see permitting, perhaps rightly, as quite a large risk to projects. They want you as a team to be able to predict an outcome. They want you to have decent people in your organization who understand permitting. So we've addressed all of those issues. We're on track for a permit. We've got a really high quality permitting team. I think the industry is looking, they would like you to get past a notice of intent. You remember I said you've got that mine plan of operations, you then get your notice of intent, and then you're 2 years mandated to get to your decision. I think there's a sort of comfort zone about getting that notice of intent that some are looking for. Of course, the closer you get to a permitting outcome, the more you get this incremental value increase. And therefore, the higher the cost to get into the asset, the closer it is to a permit. And I think the ones that are most business savvy and understand the permitting process and perhaps have more confidence in it are able to play in that earlier space, the space that we're in now. Those who perhaps are less familiar with NEPA want you to get further down that process, and then at that point are prepared to play. So I think there's an interesting timing to permits piece. The second piece around M&A is what are the alternatives? If you look across the US, particularly in that kind of jurisdiction, what sort of open pitable, large scale gold systems that are 100 to 200,000 ounces a year, plus 15-year life, previously mined site, low environmental risk, easily permittable, strong community support. If you look at the universe of opportunity in the US for that type of deposit, you can probably count them on one hand. So logic tells me, and as I said earlier, that the corporates are going to want, and the larger producers with money starting to sort of pad their war chests, are going to recognize that where do I go next? And beyond organic growth, they're going to need and want to pick up these larger, broader projects. And I think that's going to see some pressure in the M&A market over the next 18 months. And I would expect that, we would be in that mix, I would expect.
Jon, very good comments here. I appreciate how you look at this too. And I think it's important for the audience to take notes and get experience from a guy like yourself. How many majors out there have a huge organic pipeline? Very little, in my opinion.
Not many. So, I mean, as you're well aware, the whole Newmont sale at the moment, there were a lot of it. I mean, I think the number was 63 individual organizations signed up to have a look at the Newmont assets. So, there is interest and there is a drive in the business to grow, to pick up assets, and obviously at the production stage because it's immediate ounces. But behind that, you got to feed that with something, and that's where the developers come in.
Absolutely. And there's, like you said, there's not that many in the US that have this type of structure as far as projects and advancement. And should you guys get down the permitting road and get a permit, I think that's a very telling moment. I don't think, as you say, there's very little technical risk from a major standpoint. Technical risk is not the issue. I think it's a permitting issue. But you guys have probably the best chance of permitting, given the jurisdiction you are in.
Yeah, and Andrew, sorry to pick you up on your words. We will definitely permit. This mine will be permitted. There is absolutely no doubt whatsoever. In my mind, the only issue is time frame. The only issue is time frame. This mine will be permitted because it was previously permitted, and nothing has really changed. We are 100% confident we will get this mine permitted. I am extremely confident about the time frame, but as ever, there's always risk in that time frame.
Absolutely. And there's no doubt there's nothing changed from the sense that you and I look at. It's all very viable. And of course, it's had an existing prior permit that was in place. I think the only thing that's changed, of course, as you probably can say and shake your head at, is essentially the agencies. The agencies have changed, but it doesn't mean that this cannot be permitted, as you well know. Well, Jon, I appreciate the extra time with you today. And for potential investors who are listening, and the company has a market capitalization of about 110 million Canadian dollars, why should Liberty Gold be considered within the institutional, family office, and retail investors portfolio at this stage?
In my view, I think we offer tremendous value on the share price per ounce of resource in the ground that has I think, material potential to turn into a mine in the near term, near to medium term. There are not many of those opportunities. And we know that when we get this into production, we will see a material re-rate of the stock at that point in time. So the question is, if that's the business opportunity you're looking for, a developer that's going to transition to a mine, when do you buy in, and how does Liberty Gold stack up against the other opportunities in that space? And I believe if you do that math, Liberty presents a pretty compelling option.
Absolutely agreed with that, Jon. And how can interested parties reach out to the company for more information?
Obviously, we have a website, and you can read there's a link to the recent technical report that we published on Black Pine, which obviously is the technical material supporting the pre-feasibility study. We have a corporate deck on there, which kind of gives you the broader picture. And there is an email link on the website that you can send questions to. We are delighted to talk to our shareholders or potential shareholders. We really enjoy having conversations with people, and so I would encourage your listeners to, if they'd like to learn anything more about Liberty, to reach out to Susie Bell on our email. We will engage with you, and we will happily answer your questions and address perhaps any concerns you might have, and give you a good basis to make a decision about the company.
Jon, thank you for that, and thank you for covering the updates on the company with us today. Keep up the work to advance the projects, and we're looking forward to hearing from you again in 2025.
Thank you, Andrew. It was a pleasure. I really enjoyed talking to you. We look forward to reporting to the market as we get some news flow over the next, I think, 6 to 12 months. It's an exciting time for us. We've got a real tiger here, we believe, and we're going to push this through. So I look forward to reporting our success to you in over the next 6 to 12 months.